Hello, I'm Vern Baker. I'm the CEO of Jaguar Mining Company. We're a gold mining company based in the Iron Quadrangle of Brazil, and we're on the Toronto Stock Exchange. And we think we have a great future in front of us as we come out of a tough year, 2022, and feel great about how we're moving into 2023.
Well, I want to, Vern, first of all, thanks for coming on the show. I haven't seen you since June. I know you've been hard at it, and I want to talk about it. Now, your marketing literature is brutally honest. You talk about what the previous management did and how. So you use your quote. It did not end well. So your goals from the last conversations I've certainly been having with you and what your marketing material says is to improve the operating efficiencies and balance sheet, right? So 2022 was a difficult year for precious metal companies, for equities more broadly. I don't think most charts are that pretty, so I'm going to stay away from that. What I want to focus on, if you don't mind, is when you make the claims of improving operating efficiencies, what did you decide to do in 2022? What did you do in 2022, which is going to have a material benefit in 2023 to the company?
Okay, well, the first thing we did is our biggest struggle over the last several years has been with our mine called Turmalina. And we brought that in the second half of this year to a very consistent production level where we were consistently in the 3,200 to 3,400 ounces per month range. So that was our number one goal, was to get to that point where we could stabilize the production at Turmalina so we could really begin working on driving our costs down. So once we reached that sustainable production level, we started looking at how can we do this with lower costs, which generally means reducing people, and predominantly at our mines that means reducing the third-party contractors that we had on site. So we began working on how we can move those out of the system and take over those things with our own people without increasing manpower. We feel we've been successful at Turmalina, and we've probably reduced our operating costs there by $150 to $200 an ounce from what we saw in 2023.
From what to what?
From probably the 1550 to about 1350 is what we think we've been able to do with the Turmalina mine. So the Turmalina mine produced cash all year. Its costs were below the price. The all-in sustaining cost was consistently below the price. So we're getting cash, just not as much as we think we should or we think we can from that site. At the same time, we're working on our Pilar mine for consistent performance, where basically as we've gotten deeper, the ventilation has become a bit of a constraint. So we invested, really in the second half of the year, we had a significant amount of money invested in getting our ventilation up to a level that will allow us to get more headings operating at the bottom of the mine. We were operating there, so we did develop. We're actually start this year in a very good position in that we have two full panels, or 15 and 16 panels. We've developed access to all of our sub-levels there. So we start the year with a good position for development in the bottom of our mine, and we're pretty happy with the grades we're seeing there, and that we've seen an ability to recover a bit higher grade from the bottom of our mine than we've seen just a few levels above that. So
no, I was going to say, with regards to Turmalina, it's a case of keeping it going, reducing those costs, keeping it going, trying to get some of those efficiencies. And I do want to talk about Pilar and, what the future could look like. But one of the other things you talked about was sorting out the balance sheet, because again, it didn't kind of come from a good place, certainly not in terms of cash. So what's been happening there?
Well, to go back far enough, we've had a lot of problems with the balance sheet. But right now, we ended the year with about $25 million in cash. We have a total of about $3 million in local debt. Basically, we keep relationships with two major Brazilian banks, and we have some local debt we carry with them. But outside of that, we're debt free, and that has gone down. We started last year, 2022, with about right at $40 million in cash. So while that number looks like it's gone down on us, we invested a significant amount in our exploration and our growth projects, which are what really the long-term battle is for is how we find more resources to both have sustainable mines and to be able to build a growth profile for our company as we go forward. So
okay, so that basically that decision around what's going to give you the best return on capital invested, you're feeling is the exploration component and obviously getting the other mine up and running. So can you give us a sense of the allocation of that capital and what the continued allocation of capital will be in 2023 and what those timeframes will look like?
Well, in 2022, we spent well over $20 million in exploration and growth projects. So, in fact, over $23 million. In doing that, a significant portion of that was committed to what we call our FINA project, which is a known resource that we have of about 400,000 inferred ounces. It's located just the edge of it is about a kilometer from the edge of our Turmalina mine. And so we put significant money actually into development between the two mines. And we've got over half of that development in place in a system that will allow us to do both diamond drilling and development once we reach the FINA area. So our hope is that we reach that area this year and we start expanding that resource below us, because the bulk of that resource is currently from 325 meters deep and above. And because of the drilling angles, hitting below that has been difficult. So we think
that's a motorbike, not a drill, right?
Excuse me. Yes, that was that was a motorbike that went by. We're in Brazil, and they're a very common thing here. But it does remind us how important drilling is for us. So getting over there, getting some drilling, expanding that resource to depth is a key thing for us. At the same time, we started doing a significant amount of test work on metallurgy and on the engineering of what it will take us to put together a system that will allow us to make money from the FINA deposit. Right now, it looks pretty good. We don't have anything yet into a 43101 compliant form to be releasing, but we do expect to see a PEA come out sometime in the first half of the year, and hopefully out of pre-feasibility, it's a very continual line we're on, should be done around the end of the year.
Right, and what sort of grades are you say? So do you have any? Are you able to talk about some of the grades?
You bet. So okay. the resource is approaching 7 grams in head grades now. But because of dilution and thicknesses and stuff, we expect to mine that at a little bit over 5 grams per ton. Our current mine is running probably averaging about 3.5 grams per ton in 2022. And for 2023 will be similar, slightly better we expect, because we've had actually very good success as we develop towards the FINA deposit. We have identified some additional small mining areas, but they've contributed pretty good grade to our mining opportunities in Turmalina. But we see a potential for
right. And what sort of depth? What sort of depth are we at? What sort of depth are we at?
Those depths range from about 150 to about 200 meters deep so far of what we've found. We've done drilling that's identified that they extend down to at least about to 300 or more meters deep. We have drilling down that has identified some of these, let's call them the plunge components of these structures that continue to depth. And we're actually already doing some work on developing into those right now too. So Turmalina is actually generating some new resources that are replacing our A ore body. Really faded on us quickly. So as a whole, as an organization, we had to get good at finding these new opportunities and generating mineable resources and reserves very quickly. The project to go to FINA has helped us quite a bit in that. And we expect that once we get there, we will be doing a significant amount of work to expand that resource and to begin developing that resource. The limiting factor on our final resource is metallurgy. As we go in that direction, we find that our recoveries diminish. We've seen that a little bit with a couple of the ore bodies we've seen. Our recoveries are going from the high 80s to the low 80s and high 70s in some of the materials that we've mined there. But that's been expected. We're doing the work to define what the solution is for dealing with those ores. We have several options, including whether it's vending a concentrate or it's running a pressure oxidation system or a roasting system. There's quite a few options. We're looking at all of them. Currently, we're evaluating up to 33 different options. We've, of course, panned that down pretty quick, but that's how many came out as having some potential for economics on the system.
Okay, and what's obviously, so what we're seeing there is obviously because of dilution, it goes from 7.3 down to 5 something or other. Recoveries at potentially 80%, and it's knocking ways there. So what are the kind of factors that you have to weigh up? And I know you're looking at 30 plus solutions there, but what are the factors that are going to really make a difference to this? And what's that going to do to the economics? And when do we find out?
Okay, so the three keys in any of these mining projects that we look at is how many ounces you have, what kind of margin you have per ounce, and how much capital you have to put into it. So, we've already seen that we can probably if we don't need to build a complex system for pressure oxidation, we can probably build it for as little as $35 million. Capital development, everything is basically developing into it, getting it running, getting a new fleet of equipment in there, getting the ventilation set up, that we can probably kind of have it over the next couple of years, very well developed for potentially quite a bit less than 30 million, but with contingencies and stuff, $30+ million. Then that goes up if we start adding in POX plants and stuff being built on site, to where it could be over $100 million in total capital. So evaluating how much capital you put in versus how many ounces you can get out and what the margins are of those ounces. The better the grade, the better the margin. The better the recovery generally, the better the margin. And so it's a balance of all those things that we're evaluating. Is how much capital to put into it, how much we can get paid per ton, and how many ounces it generates over really it looks like about 10 years, over the next 10 years.
Right. Okay. So you've got 25 million in cash. You spent 20 million last year in exploration. Clearly, you can't go into 2023 and spend $20 million in exploration with FINA and what you're trying to do there in terms of getting into production there with your 30 plus options. You got to work out how you do that. So what is the focus of the capital? Because talking about casually about raising $35 million off the back of last year, actually, is that going to be doable?
Oh yeah, quite. Well, understanding that. Our cash went down by about 15 million last year. Over 8 million of that, or about 8 million of that, was paid in dividends. And so we made the decision to start taking, rather than pay those dividends, start using that money to go against our capital needs in the near future. As well, we did generate enough money to put well over 20 million into exploration and growth projects. And we expect to be able to do that again. Again, 30 million over the next really 3 years, 2033, 2024, and 2025, because a lot of the development is ongoing after we get to the mine itself, is quite doable by our organization.
But what is that? Are you talking about 10 million a year for the next 3 years? Or are you talking about 30 million a year for the next 3 years? So I didn't catch that.
Probably more like 6 million this year and 12 million to 15 million next year and 10 to 12 million the following year.
Gotcha.
Something on that order is probably what it takes if we're developing it solely as a mine. The large capital, which is whether we have to look at raising money or something else, is is if we need to build a complex POX plant. So then you're going to add potentially another 60 or 70 million dollars for a flotation and POX plant to make that work. That is a challenge. How do we do that? Do we need to do that? And how we go about this from this point in time. So right now it looks good.
But how do you yeah, I think I said in my summary after the last interview, there's a good team trying to do things the right way, and I still believe that today. But how do you stop this looking like a kind of science experiment where you're saying we're going to produce capital, but we're going to keep plowing it back in the ground, and and therefore what's in it for investors, shareholders alike? Because there's got to be the standing still thing obviously doesn't work for investors. It's the growth component. So making new discoveries, increasing the ounces, cutting costs, improving the margins, that's all good. But, is there a kind of meaningful step change possible here with what you're seeing on the ground?
So depending on what the process is for us to go forward, whether we actually build a POX plant, which means a much larger investment, we look at a step function probably going from mid 80s in production level. We were low 80s last year. This year will be mid 80s. Going from that level to the 125 to 135,000 ounces per year is kind of this. What we see the potential for FINA is on a pretty straightforward basis, without a lot of stretch. We see ourselves being able to do that. We have some other small opportunities and stuff right now. The real key long-term beyond FINA is what's that next resource after that? Because the FINA one's there, right? We've done the drilling. We're going to be able in our mineable resources and reserves this year, we're going to be able to bring those upgraded from inferred because of drilling. We've got the material to do the test work on for metallurgy from doing all that drilling. And we're putting in process so that can become reserves, the pre-feasibility, feasibility planning that will allow us to build that mine and take that step function. As well, we're still looking for that next opportunity within the rest because we have a lot of excess capacity. We have three processing plants located in various areas of the Iron Quad. Currently only operating two of them. Both of them are operating at less than capacity. So our ability to find even modest size resources that can feed those plants can generate very quickly, can generate good cash for us, but also can generate increases in production and increases in our overall margin to take us forward.
And can you do that with it? Because we talked about that last time, increasing the throughput of the two functioning plants. I mean, in terms of against nameplate, what percentage are they operating at?
So the Turmalina mine, if we did not do any major adaptation to it, if we just kind of took what it's currently able to do, what it's currently able to process, is probably running at about 1,200 tons a day average. And what we've seen is a potential for it to probably run at 1,500 to 1,600. To run more than that, we have some small investments we would have to do if you did what we're doing now, only a little bit bigger. Basically, we need to add filtration capacity for tails to expand. So it's not a huge thing, but we can expand that to about 1,900, probably fairly easily. Beyond that.
And where would that increased throughput come from, do you think?
Well, our target is to have it come from FINA so that, and we probably invest enough to get that up to about 2,000. Our thought is that we get 1,000 tons a day from Turmalina mine and 1,000 tons a day from the FINA mine at some point.
And they're comparable ores? Are they comparable ores in terms of the kind of setup? Is the plant set?
We will have, depending on what we end up doing, we will probably have two streams. We'll have the Turmalina ore, which is pretty straight milling, and we'll have the FINA ore, which will have some type of additional processing on it. So there'll be two streams running through our plant, but currently our plant is set up with 3 grinding systems. So to get to the 2 streams, we have to invest a little bit to split split the track that the ore takes after it's gone through the primary crusher. Currently, our crusher has more than enough capacity to reach any number that we've looked at so far.
Right, so that wouldn't be a big investment by the sounds of it, but in terms of time, because time is money too. So how long would that take, and when would you expect some of this additional throughput to come through from Fina?
The very soonest we would see significant tonnage coming out of Fina would be 2025. And again, it depends on treatment options, but we should reach Fina this year. We should get there to where we can set up and start expanding the resource and or developing the ore. So we could see development ore before that. On a small scale, we can handle it without an investment at the plant. But as that goes, we have to put it in. So we've kind of looked at, potentially up to about 5 million to put in the split. The split on how we direct the ore after it goes through the crusher, which is really all we have to do, is split it so that we can feed different mills with different ore.
Okay, understood. So that's the time frame. And that comes back to that again, what we talked about back in June, which is this reset and this 2-year plan. So it still makes sense to me. What about the other plant? What's happening there?
The Caeté Plant, where we run our Pilar ore. So the Caeté Plant, on a steady state basis, can run over 2,000 tons. We've seen it consistently run 2,200 to 2,300 tons a day when we have material in front of the plant. But because we average about 1,300 tons a day from the mine, it's run on an on-off basis. We usually run it for about 5 days, and then it's off for about 3 days, 3 to 4 days, depending on the current rate of production at the mine. So significant capacity in that plant, doing nothing but running it on a more continual basis. We're always looking at that. We have several exploration projects near the Caeté Plant. We have some old mines, some that we mine, some that other people mine, that we're looking at potential resources that are remnant or that are indicating there's some kind of extension we could redevelop in multiple places. But right now it looks like we don't have anything that we're putting a significant number into our resources yet. We're very pleased with some of the targets. We did add a few ounces at a place called Caeté Plant, which is located next to our old Caeté operation. It's, I believe, a 6-kilometer haul directly to the mill, and it's already got a road because we ran the Caeté project about 10 years ago, and there's a road for haulage to the plant already. So it's a good setup. We just got to figure out how to develop it, and that one takes some permitting. So you've probably got some permitting time frame to get it in place.
And what about tolling or DSO from other players in the region? Is that
obviously we're open to that, but at this point in time, there's not really anybody outside of Anglo Gold. Anglo Gold has 2, maybe even 3 operating mines. They have 2 operating units. Let's say one has, I believe, 2 mines in it that are running in the area. They're a great company, and they have, as I said, some very good systems in the area right now. They're looking at, and some of them, there's potentially some synergies with our organization. So we always talk with them because we're in the same business, in the same district, and of course we have people that worked with them, and they have people that worked with us. So we try to keep those lines of communication open right now. Our business deals with them are very small, basically on the refining of gold end of it, but they're doing a great job, and we've been pleased with everything we've done with them.
Okay. So it's on the table, but see where we go. Can I talk about this year coming? Because I was kind of focused on some of the things that you've been doing in 2022 to set you up for success in 2023. Look, I get the 2-year plan thing, so it's kind of all relative. But one, I think the market's expecting a reaction from gold. Gold price is very healthy, $1,900 today when I looked, and you are producing, and you're reducing your margins. So there will be positive cash flow from that. But what are you going to do? What are we looking forward to? What's important?
Well, the big value add in our industry comes at the end of the drill bit, without a bit. It's the diamond drill bit, and we have been building an exploration team. We did lots of exploration last year. We did quite a bit the year before, but all through that, we're continually also building that team and the knowledge base within that team. Our specific direction is to look for good grade development opportunities. I like them in the mine, because within the mine, they don't have permitting issues. They have development issues like FINA. You got to get over there and you got to get it going. But you're looking at something at FINA that's probably 40% to 50% better grade than what we're currently running, right? And that's kind of on an overall average, not what we could potentially do within the first several years when we access it. So you have this, we're very focused on how do we drive looking for those ore bodies that can contribute better grade to those plants that we have, because we're gold miners. Grade is king, right? And that's what we're looking for with the thing. We are going to have some. We believe that we're going to replace our reserves and resources in our mines when we put out our annual report and our updated MR. And we think we're going to be adding some resources that we've identified and put. Generally, we've had some old resources we knew about, but to confirm them, we needed to put some drill holes in them. So we're initializing some of those ones that we're looking at that have potential either to open up our old mill at Paciência and or contribute additional and grade or high margin surface ounces, right? Something on the surface with a low stripping ratio at 1.5 grams is good as 5 grams if it's a kilometer deep. So it's a grade relative to geometry and location, but I think that this is our year where we've got ourselves positioned, we've got our targets lined up, that we can start really adding value with our diamond drill bits. Both by increasing the grade we're running through our mills, and first of all, you have to increase your resource so you can build your reserve up, so you can produce more. And that's what those guys are all about.
I mean, I'd agree with that, because I was going to go there with regards to the short life of mine. What are your institutional shareholders saying to you? Because again, it's been fairly flat. They want to know what's going to move the dial, and the reserves and reserves, resource and reserves will help. But what else is there?
Well, you cannot move the dial without resource and reserves, right? I mean, you could high grade your resource and reserve and make it look like you're making more cash today, but you're not really benefiting your shareholder when you do that. The way to add value in the whole gold industry is to find more gold at grades that provide good margins. Right? That's where everybody adds value. Our advantage as a small producer is we're small enough that finding something has a huge impact on the value of our organization. We don't have to find 10 million ounces to have a big impact on our organization. And we're in great gold country. We've developed a great team, and we're generating the money to do that exploration, and potentially to do the growth from that exploration with our production. So we're not a company that looks like it has to take a whole bunch of dilution in order to grow or in order to continue developing resources that we identify and really feel can bring value to our everybody in our organization, right? It benefits everybody from the miner at the face to the shareholder when we increase our resources with good, high margin ounces.